Hi everyone, welcome back to today's episode. We have Paul Briscoe, is a YouTuber and dividend growth investor with 20k subs on YouTube, right? So thanks very much for coming on.
Yeah, yeah. 20. I think so. You know what? I don't check. I've never checked, and I like to keep it that way because I think I'd just get competitive if I did check those sorts of things. And I'm sure loads of people are doing way better than I am. So yeah, it's pretty cool though. It's kind of weird, the YouTube thing. Um, I kind of think that everybody, including you, by the way, I'm quite scared of what you are right now. I just think that everybody who comments and everybody who calls me and emails me and you getting me on here, I think I'm locked in a mental asylum and you're all my caretakers or something. And this whole ride that I'm on at the moment is just some sort of mental fabrication that I've got. So it's kind of strange.
Yeah, I'm in the same position in that I'm only 22. I've not been investing for a long time, but I have an audience of people who are looking for me for like stock market advice, and I just have to say, like, guys, like I can provide you with the educational content, but please don't take my advice. I'm not an expert, and it's
Exactly,
one
man.
of those things. Once you kind of get like a small following, it kind of just starts to grow and grow and grow, and like I never imagined I'd have a following online, but here we are, right? It's crazy.
Yeah, there aren't too many people out there who are with investing coming up with original things to say, because this is a thing that's been going on for 100 years now, and pretty much everyone who has got involved from a behavioral finance point of view. You've got Morgan Housel, who is basically the leader on the psychology of the markets right now, writing his book, The Psychology of Money. He's got another one coming out soon, which I'm desperate to read. I think it's going to be, uh, I'm trying not to swear, amazing. Um, and But even he is simply taking stories that he's heard and tidbits from uh, legendary investors and sort of parroting them out. And I think we're all doing that thing, but it's the way I think that we personally apply it. And I think that's the way investing is kind of changing right now, is we're all in a different world. We all have individual stories. Everyone is different. And it's our personal stories of how we deal with the grief of being down 50% or the elation of being up 50%, which by the way I am today because Nanox just Nanox just come out with its said it's got FDA approval, well, not the FDA approval, but it's got the approval of its new ARC system. So that stock that I've invested in is now 68% up, but I was about 90% down, so it hasn't really made much of a move. And dealing with that behavior and kind of hanging on or trying not to be affected by anything newsworthy or those sorts of things. That's what we can share as content creators. That's what we can do, show how we're dealing with it, because most people keep their money quite quiet. They don't share those stories. They simply parrot, and that's where I think we should be as content creators right now.
Yeah. Do you think there's a danger with stock market creators that like during the kind of hype area, people are making content for purely for like attention, and that often leads people down like the wrong investment advice, and because you're trying to keep up with the latest trends almost.
Oh, absolutely. It's become really obvious that people who really didn't know what they were doing or were taking way too much risk for that to gain those likes and gain those that that popularity just have completely collapsed. And don't get me wrong, I'm not making as much content at the moment, but it's because I don't think there's anything to say. I really, if I don't think there's anything important, I'm not here to chase likes and views and money, YouTube revenue. I want to say things when there's things to be said, and right now, it doesn't feel like it, other than my plan, which is kind of stay the course.
I think maybe that's what a lot of creators are pressuring themselves to put a new video out every X amount of days, and if there's nothing has happened and that's like worth talking about, then they almost make up something to scare people or to create some kind of hype, right?
Yeah, absolutely. Fear sells, mate. If you put some fire in the background of your YouTube thumbnail, you're gonna get you're gonna get clicks. And I've tried to avoid that as much as I can. There's a few people out there who have tried to like make me improve my thumbnail strategy, is the way people have put it. And I think there are ways to do that without creating that hype. I think you have to be a little bit clickbaity these days. But ultimately, if I've not got anything that I think is important to say, I'm not gonna try and generate a problem. There's a few things definitely which I feel are pretty important to clarify at the moment, but nothing where I go, okay, I've got this new stock that I want to buy, or nothing where it's because I don't think there's that many deals out there just yet, or something like, all the banks are going to collapse. I don't know if they are. I don't think they are. I'm not CNBC, so I'm not going to sit there on a 24 hours news cycle trying to push and push whatever we can come up with, basically.
What was it that got you into investing in originally, and what kind of helped you gain confidence in the market?
So if I'm honest, I'm exactly the same as everybody else who would be listening to you or listens to my videos. I was 2018, 2019, I was sat there looking at my future and I sort of thought to myself, well, where's this going? What can I do about my to help myself out in the future? I've had two kids on the way. I was thinking, bloody hell, I'm missing something here. What should I be doing? So same thing as everyone else did. Ended up on YouTube, looking at Graham Stephan, looking at Andre Dijk. As much as he's changed recently, his original videos about the timing, not timing the market, the longevity of the S&P 500, um, the way markets work, I think was absolutely valuable content, and that's kind of what got me involved in investing. That's where I sort of started looking. And I think I had a friend as well who explained open-ended investment trusts to me on Hargreaves Lansdown. He said, "Oh, go with Hargreaves Lansdown, go with Hargreaves Lansdown." So I did, and I realized how much money they were taking me, and that got me to look at other brokers and figure out the rest of it, because I started having a lot of money in my accounts. I was getting to an age where I was starting to make considerably more income than I have done in the past. And I'm a very good saver. I think I'm a naturally frugal person, a naturally frugal saver. So I had a good chunk of money and I didn't know what to do with it. I knew it wasn't getting anything in a savings account. And I got told by my friends to do investing, and he had parents who were very astute at that. So I learned about that through him, and then I just went on YouTube and figured the rest out. Figured out how different brokers work, how you could possibly earn more by uh, looking into businesses yourself, and trying to look towards other things, and that's where dividend growth investing came in.
Yeah, what was it that pushed you down that investment strategy other than other, like, 'cause a lot of people obviously went to growth during the past couple of years.
Yeah.
A lot of people like chasing higher returns, whereas like dividend investing was more of like a seen as a bit more safer and stable, right? And why was it that you were attracted to?
So I think, if I'm completely honest, I think it's my age. We've got to remember, and this is Morgan Housel again, everyone is different. Everyone has different experiences in life, and no two situations are the same. So somebody might be so desperate, and Morgan Housel uses it in one of his latest podcasts. He says um, something about people in underprivileged neighborhoods are buying lottery tickets because a large win on something could completely change their life, but saving those small lottery tickets could um, would only buy them food for a week. And I think in some ways, growth investing is very similar to that. You can, of course, have very uh, uh, you can be very level-headed about your growth investing and invest in great companies that are growth driven. But I think a lot more people during 21 and 2020 were probably looking for the lottery tickets, and that could be their experience. That could be their thing where they they were 21 years old and they saw a quick way out of not having to work till they were 67. It's a real possibility. I'm not saying that's for everyone. I'm saying that it is probably one of my theories. And being God knows how old I am now. I'm like 37 or something. When I started, I would have been 30. I had income behind me. So I had this, and I also had family to support. So I couldn't just blow everything on risky investments. I had to find a way through it. And what stood out to me with dividend income most of all was the regular income that it can produce, getting that monthly wage, but off an amount of money that you've previously invested. So long run, that seems like a really good idea. But then as I looked further into it, I figured out my own style of dividend growth investing. I figured out that dividend growers, particularly ones which are new dividend initiators, are more likely statistically to grow total return more than any other companies in the S&P 500. And also, there was a document, it was a study, it was stocks versus T-bills, which is often used to denounce dividend investing by saying that dividends are practically irrelevant and they probably won't beat treasuries. But actually, when you look at the stocks that did beat the treasuries over the 50-year period that it goes through, um, the these stocks were dividend growers. There's no doubt about it. The top, I think it was the top 30 stocks that outperformed were dividend growers, and it just said to me that was my own personal opinion of it. Obviously, not for everyone. I must stress that, not for everyone.
What is it that you look for then when you're like selecting dividend companies, and how do you like identify good companies for your portfolio?
Cash flow, cash flow, cash flow. So it's all about cash flow and delivering back to the shareholder. So dividends aren't necessarily the only way I would look at an investment, because I look at share buybacks as well. If Google wants to release a 70 billion share buyback program, which it did last week, I think, and not deliver a dividend, that's a very tax efficient way of delivering back to the shareholder. And I, I think that's great as long as it's got the future cash flow and you can see it coming in. So when companies are producing excellent levels of cash, that's where I'm sort of looking at, and also long histories of producing cash as well. And something that where the company is likely to be going around for a long time, going through recessions, beating recessions, and then coming out the other end. Long histories of that they're the sort of things I'm looking at. And on top of great balance sheets and all that stuff comes secondary, the great balance sheets. And then on the qualitative side, you're looking at moats, and I want to be looking at whether there's any competitors that can break in within the next 10 years. For instance, Broadcom is one that's on my brain, which I would love to invest in because it creates ridiculous cash flow. It appears to be, for me, at a ridiculously low valuations, but it's always got that thing about Apple coming in and taking away its business at the moment, and I just can't bring myself to buy it yet. But I must admit, at the moment, Meta is one I was looking at yesterday. The changes in that company over the past couple of weeks and the focus of Meta at the moment, particularly and for you, that's probably a really good thing to talk about, is Instagram Reels. Instagram Reels has just set off on fire. And the only thing that kind of breaks my rule there is Facebook aren't really giving back to shareholders at present, even though they're ridiculously good valuations. But I'm telling you, I've been looking at it. I've been looking pretty closely, and it's just very interesting.
Yeah, Meta had a crazy price action recently. Like, I remember it going all the way down to like, was it like $90, and now it's back at 200 and something. And
Yeah.
I was managed to hold through when a lot of people, I think, were panicking that like, oh, the metaverse is taking up too much revenue, or uh, but I think that just shows like the underlying businesses and like the platforms they have are still going to be around for a long time. So I think
Well,
like holding through the kind of fear,
yeah,
the
man.
fear and that paid its rewards in the long term.
That amazing thing about Meta at present is, um, so I think the first thing that came out of the earnings call was Mark Zuckerberg gave about 90 seconds on the metaverse. He didn't really talk about it. The rest was on AI, which is a bit of a worry at the moment. Not everyone should be talking about AI. It's in its infancy at the best. But the second bit is TikTok, and TikTok having its trouble with China at the moment. And Facebook has been an acquirer and a copier mostly throughout, well, since its inception, and it's kind of used Snap as its R&D. Snapchat will come up with new ideas, and basically Facebook copies it with Instagram and puts in, augmented reality and trends and things. Now with TikTok possibly having a problem with China, you could probably start to see, and I think we are seeing it all right away. I think we are seeing it right now, is that Instagram has basically copied TikTok, and it's now going to start taking TikTok's lunch, I think. With the increase in Reels and the revenue from Reels, I think there's a real possibility there. And while I'm probably not going to be invested in Facebook or Meta, I'm very bullish on it now. I think there's a real story there starting, and whatever happens politically with TikTok, it could really benefit Facebook as well.
Yeah, I think that's a very interesting as well. Like how TikTok is taken over, kind of the short form and like changing people's attention spans as well has become very addicting for like a lot of
Of
young
course.
people. Like I think there's like other risks as well with TikTok, like the security risks, and if it does get banned from the App Store, then Instagram is already there, ready to kind of take all of that market share. So it's quite
Yeah,
interesting, I think.
and
Yeah.
politically control the minds of future generations. Basically, that's the reason why they want TikTok gone, because you've got millions of minds, young minds, sitting there in front of TikTok, controlled by a Chinese power. And if it was the other way around, if we had an app in China right now, and we had that many Chinese children looking at that app, do you think we would try and shape their minds a little bit differently? Maybe put in a few anti-CCP stuff, or even things about how their lives are quite restricted. I think we would, and that's the big risk on TikTok at the minute.
Yeah, 100%. Um, One thing I wanted to ask as well, I think you did a video on it recently, of how like the average investor has always underperformed the market, and why do you think that is, and like what would you say your advice is to people who want to like continuously beat the market?
So I this is a worry of mine all of the time. This is a this is my one thing that I think of anytime I'm looking at my account. I'm sitting there, and I'm sure a lot of other people are as well. I'm sitting there going, what makes me more special than the market? Or the the statistic most people talk about is 80% of fund managers don't beat the market. And their excuse for that is we're not trying. We're trying to protect people's money in certain times. Um, the average investor, according to JP Morgan, doesn't perform the market quite considerably as well. I think they say it's something like their return is 2.2% over the past 20 years, and the S&P 500 is around 8 to 10% over the past 20 years. So that's a huge difference. Now, I think if you And we're going to take this more from Sven Carlin because he was the person. Because I asked the same question to him. I don't know if you're familiar with Sven Carlin. He's like he's one of the top sort of value investors on YouTube um, at the moment. He believes he has beaten the market for years. He's in fact achieved financial freedom 3 times, which was crazy. But he said that it's all about behavioral finance. It's all about being aware of your surroundings, being aware of what happens in the market, and being aware that if you invest in good businesses that drive cash flows and have a reasonably visible good future, then you are likely to beat that. And everyone seems to fall foul of this idea of don't time the market, time in the market. And it's incredible. Everyone is saying it right now. Morgan Housel, Brian Ferrari, Sven Carlin, they're all saying, and they're all bringing up very valid statistics that people sell when it's low and people buy when it's high. And that's all they do. And that's why the average investor fails. The average investor simply fails because they do not check their head and they don't enter into investing with a clear and level perspective. And hopefully I am also in that, I am entering with a clear and level head. I've done my research and I can see that. Other than that, it seems that you don't really need to buy the best stocks. You just need to sort of have a good idea of what's good. I mean, I've always had the theory of buying the S&P 500 and then getting rid of the ones which are obviously quite poor. Getting rid of 3 will make you beat the market. So there's one way to beat the market: buy all of the S&P 500, get rid of 3 that you think are going to do badly, and you've got a really good chance of beating there. Because what do you get rid of? Tobacco, maybe, oil, maybe in the next couple of years, and you might beat it over 20 years. Who knows? But the idea that the average investor loses money. And JP Morgan have the bar chart that says the average investor loses money, but the data company that hoards the data, I can't remember their name right now, but it's written at the bottom of that slide. They do a full report on this every year, and they absolutely say it's all about the buying low, buying high and selling low. The average investor can't keep their head in the game, and that appears to be the main way of beating the market.
Yeah. What are like if you were a new investor, what are like some of the mistakes you would tell people to be aware of, other than obviously like diversifying and kind of buying when there's fear in the market? Are there any other like big mistakes you see people making that you can recommend?
So diversifying isn't necessarily a bad thing or a good thing. There's actually a lot of arguments out there to say either way is great, because you've obviously got the 5 stocks that could one could go to the moon and then you've beaten the market, or you can diversify and hopefully you've beaten the market that way. So diversifying is probably a good idea. I'm not saying it's not, but there are ideas out there to suggest that it's not necessarily a bad idea. Um, Staying in the market is got to be the most important, though I can never say with full breath that's advice, because I'm living through it myself. That's the whole point of what I do and what my YouTube channel does, is I'm living through that myself. I have no idea how I'm going to react during a recession because I've never invested through one. It doesn't. Sorry, you have to bleep that out. But that 2019 2020 crash doesn't count. It doesn't. It just wasn't. It was just a bonanza, that was. And in fact, I was kind of late to that because I was waiting for April to run around so I could start putting money into my ISA, and I actually missed the one of the best 10 days of that crash. So I don't know. if I'm honest. I really, really don't know, but I'm trying. And hopefully in the future, someone's going to come back to this in 10 years and see whether it worked or not. And if it works, then yeah, follow. If it doesn't work, then you know, you know where you shouldn't go.
I think you did a recent video on kind of recession indicators,
Yeah.
and obviously like there's a bit of uncertainty right now. What do you think? Obviously, as an investor, you're going to keep kind of carrying on with your same strategy, but do you worry that maybe there's kind of like a crash around the corner, or how do you see kind of the market next year or so?
Absolutely, it's going to be a big test. I think the test comes before the recession, and when people are talking about the recession, because everyone gets scared, and that's when people start coming out and or not investing as fast. I think that's what's going on at the moment is people are not investing as much because they are scared of where the market is going. And there's big names out there. You've got Michael Burry, who's been wrong a few times now. You've got Stanley Druckenmiller, who's one of my favorites. He is basically end of 2023, early 24, recession will hit, and it will probably be a hard landing. And and that's scary. That is really, really scary. But what I'm trying to do, and what I don't know, other people probably should do, is have their strategy in mind, have their financial plan in mind. But when I look at these indicators and when I look at um, the possible tests that are coming, I'm trying to prepare myself more than anything. I've got written on my wall at home, I've got my portfolio value in half, 50%. It's written in big red letters. It's written on the wall. And I go, can I take it if my money goes that low? Yeah, I think to be honest with you, I haven't updated it in a while. It says like 18,000 because I wrote it down quite a long time ago. But it says 18,000. I go, can I take it if the money gets that low? And at the moment, in my head, I'm saying yes, and I'm mentally preparing myself for this horrendous event that's coming and being able to invest through that, because at that point you're going to sit there and go, well, is my job safe? Is my house safe? Are the taxmen going to come after me a lot harder or anything like that? And I'm going to go, ah, shit, maybe I should hold on to a little bit of extra money at this time. And oh yeah, bank accounts are looking pretty good. They're only 5%, which is genuinely a conversation I'm having with myself at the moment. I can see bank accounts at like easy access bank accounts at 3.2%, 4%. And you've got NatWest Digital Saver at 6% right now. Uh, that hits my financial goal. That I might not invest as much in the market if I'm getting 5% and I know in 20 years 5% is going to get me to my financial freedom goal, then what's the point in taking the risk in the market? A lot of people seem to want to make more and more money in the market. They want to continue, and they see 1 million, and they see 4 million, and they see an extra 10 years, and they see 9 million, and they go, "Oh yeah, I want 9 million." But for me, I'm focusing on around somewhere between 450 and 1 million. If I focus on that and I calculate that I can get there at 5% a year, then I'm going to take the lowest risk to get that. Enough is enough. That's another Morgenhausen. I think that's a chapter in Morgenhausen's book. Enough is enough. And people need to realize where they need to get to. And if they can get there, then they don't need any. And that's that.
Hmm. Do you think for all investors, like it's important to have like a plan and like a goal in mind of what kind of they're aiming to achieve for financial independence by, and why do you think that there is so much misconception still in like the public about the stock market, and is it kind of a lack of education and like people aren't aware of the stocks and shares ISA, for example, is like a great tool that people don't seem to use enough.
What's your goal? What are you going for?
Well, financial and well, being able to like retire early and yeah, not being stuck in the kind of 9 to 5 lifestyle forever. I think I also like the idea of being able to like travel and live abroad, not being stuck in a job where I have to be in commuting into London every day. Or that's kind of my goal is to kind of be able to live on my own terms.
Yeah, man. I think that's what it is for most people, isn't it? It's like it's getting there. 22, you're 22, you say? Yeah, man. Like I think it's fucking amazing that at 22 you are starting to get involved in having the financial plan of the future because I feel the pressure. I didn't start till I was 30, and so I look at my 20-year horizon, and the earliest I could possibly retire is like 50. And that's the earliest, and that's if I really push hard. I need to put in 40% of my salary to get to that level. But at 22, historically we're talking as well. I'm not guaranteeing anything. It's more that historically it looks like at 22, if you can start investing like 200 in a couple of years, go to 500 a month, um, eh, you're going to be retired by 40, and not just retired, but really comfortable, like living a stupidly comfortable life. And if you take the 4% rule at the moment, it's going to be ridiculous, and that's crazy. How many of your mates or people that work in your circles of the similar age are investing like you do?
No, no one my age has got money to invest. Like
Mental, innit?
from what I've like people I speak to, I think like I had quite a decent job when I left school because I did an apprenticeship and kind of worked my way up. And I was always like a quite frugal. Like I hate spending money, so I was just putting my money into savings over like during like the lockdown period. And then I was like similar to you, I was started looking on YouTube like what can I do with this money other than just sitting there. So that's how I kind of started to invest and then learn more. I just got addicted to like learning about finance, I guess, because yeah, the goal obviously is to get out of the kind of the rat race. So
Yeah, it's incredible. I have been in a position recently where I'm talking to a lot of younger people, um, who come from all sorts of different backgrounds, and fucking no one is investing. A couple of them are trying to trade crypto, but like no one is setting out a financial plan at the age of at the age of 22 and going, right, at this age, I could work out that I will have, 1 million, and that will allow me to spend, what does that allow you to spend? Around 30,000 a year at 4%. That gets you 30 grand a year at the age of 40. You're at least, let's consider inflation at that point, and maybe you've got a house. You're at least able to halve your hours of work at that point, without a doubt. And you could go even further than that. It's crazy to think of, in my opinion. And I just hope it's possible, because I hope it's possible for somebody like you to be able to do it. At 30, I started investing, and that was quite tough. My investment horizon isn't as long as yours. If I give my investments 20 years, and that's working quite a lot and saving at like 40%, it's going to take it's not going to be as comfortable as what yours is going to be, or potentially could be.
yeah, I think a lot of young people are being influenced by like the content they're seeing, which is maybe think I think some people are investing like a few hundred into crypto coin, like altcoins and things like that, expecting to get like a 2, 3, 400% return overnight. I think
Yeah.
that is like super dangerous as well. I've seen
Short
lots of
form,
people who have lost money.
short form content sucks, man. I try and stay off short form content, and I'm realizing that I have to be part of it. And I've got TikTok on my app, on my phone, and if I ever turn it on to go look, I get stuck for an hour, and I hate myself after it. It doesn't give me dopamine. It doesn't give me it's like going to McDonald's. You know, it gives you that kind of short dopamine thing, but after it, you feel ridiculously guilty. And any system like that, in my opinion, um, uh, is not good for somebody who actively wants to be healthy, if you get what I mean. I mean, I'm not pinnacle of health or anything, but I would say that somebody who wants to be healthy in their body avoids fast food and junk food, which is very reactionary and very it's it stimulates that environmental evolutionary behavior. In the same way, I think TikTok is doing something similar. It stimulates more of that amygdala, that fear center in your brain, or that those dopamine receptors in your brain. And I think if you want to achieve, or if you're going to achieve, you'll find out in a few years if you're going to achieve in anything academic or anything in your personal life. I think the answer to it is going to be having a TikTok detox, or a complete media detox, because eventually it's not feeding you any real information. What I was interested in was I noticed that some people are using TikTok as Google. So if they want the answer to something like, I don't know, how many teeth does an alligator have, they'll put it into TikTok sometimes, and they'll try and get the answer in a video form. I find that kind of alien to me, but that might just be my age.
I think it's crazy as well how people are so easily distracted now that even like a TikTok video needs to have like a video game clip at the bottom
Yeah.
and then like the actual clip at the top just so that people can
Yeah.
watch something.
Yeah, I see them, and I kind of go, which one am I supposed to be looking at here? And it's like something really satisfying at the bottom, isn't it? Like it's either a video game clip, because I think video game clips like headshots and stuff like that are really quite addictive to watch. They really, really are. But also, it's something like someone will be slicing something in a really interesting way at the bottom, and then you're being told something in the top. What is that all about, mate? It's they've obviously got the right ideas. I just everyone's vying for your eyes, and all I would ask is try and make it valuable. But that might just
Mm.
be me being boring.
Yeah, so I tried uninstalling it from my phone, but then I actually was like, the only way I'm going to get my podcast out there is to create short form clips. So I was like,
Yeah.
okay, now I need to reinstall it. And now I try to just go on the app to upload videos rather than like consuming them.
Yeah.
But then you
So
find yourself on Instagram Reels as well.
it's the same as me for my wedding photography business. It's no good to just put up photos of weddings and examples of my work. I have to slap them into a reel now. And what happens is when you slap them into a reel, it shows you your reel, and then you just flick up, and that's it. I'm gone for an hour. I'm done. You might as well write me off. So I look at my own reel that I've just put on there, and I go, oh yeah, okay, everything fits. It's okay. And then it flicks up, and then I'm in an attention spiral, and that's it. I'm gone, and whatever I was going to do in the next hour is just not getting done.
Mm. Yeah, I think we mentioned a little bit about AI, which I think would be interesting to touch on because I think
Yeah,
as like even as an Instagram creator, like I'm seeing all of these pages spawning, which are very much obviously people who are like getting content ideas from ChatGPT, putting the text, copy and pasting it into Canva, and like every creator is almost like a just copy and paste pages. There's no like I think you're losing the kind of aspect of like someone's personal opinions and perspective isn't really there anymore because it's just AI generated. So
yeah,
but
I,
I think it's an amazing tool at the same time, though. I think like I've used it for lots and lots of different things, and even from like writing resumes to like in my previous job as well as like writing emails, writing website text,
yeah,
making me a lot more efficient.
yeah. I'm guilty of it, completely. I right now am trying to boost the SEO on my wedding photography business, because I've decided to start opening that back up again, and I've written out blog posts all the way up to the end of July from the start of January in 3 hours on ChatGPT. I wrote every single one, and there's simple things like I typed into Google blog ideas for a wedding photographer, and then I went onto ChatGPT and typed in those titles, and ChatGPT, I asked it to write a 500-word blog with SEO guided towards a wedding photographer in the UK, and it churned it out, and even then, I was able to link it to my photos folder, and it would insert into the blog the photos that it thought were necessary to go into there. So I have used ChatGPT, and I'm going to continue because I have no interest in writing blogs like that. However, I think you hit the nail on the head with the creativity. Um, it if you see a blog post that's written by ChatGPT, I think you can notice it immediately because there is a complete lack of creativity or even opinion in there, and that's where at the moment it's going to be really important. I think I heard something very recently that ChatGPT is probably not going to take your job. It's going to be the person who can use ChatGPT the best who's going to take your job. So if you're an editor or a video creator or something like that, it's going to be your ability to generate something through AI, like the news, let's say. So there's a news article. It's not going to be good enough for a content creator to just read the news to you. You can get that off a news website, but you might want them to generate the news article and then give your opinion on it. And I think that's where at present AI is at its most weak and unlikely to develop anything, because the point of, and let's not call it AI, it's not artificial intelligence because it's not intelligence. It is simply a really high form of machine learning because it is just dragging stuff off currently Google. And so it can only come up with things that humans have previously said. And what's brilliant about humans is that we come up with unique and new perspectives on things. And at present, there's no such thing as an artificial intelligence, and therefore it can't create any new opinions. So that's where people should be worried and be looking to create with AI. I think is generating their opinions around these new systems, and adding creativity into the systems where you couldn't before. Have you seen Adobe Firefly? Just out of interest.
Is it one of like the photo um or like video editing things that's coming
It's
out?
going to be incredible. It's their new AI offering, and essentially you'll have a picture of yourself, and you'll type in change the jacket color to red, and it'll just do it automatically. It's absolutely incredible what it's coming out of. But it's going to be those things. It's going to be what the creator can do with, say, Adobe Firefly. It's just the images that you can come up with in your brain. You can give it a color scheme, and then it can generate something, and that's what's important at the moment. It's never going to just, well, it's not never going to just come up with something, but for the foreseeable future, and I assume within our lifetimes, our AI is going to be a tool that we use, and the people that can use that tool the best, they're the ones which are going to succeed in that world.
What about using AI as like an investor as well? I think I've seen people who use ChatGPT to like summarize earnings calls, yeah, or like carrying out research, or even like using it to create trading bots, which is a bit scary. I mean, so you've got AI trading bots just against AI trading bots. It's kind of like there's not much human element anymore in like the short term markets
Yeah.
at some point.
There's
So
there's been a lot of that recently, hasn't it? And it's been around for, it's been around for a while. I don't know where it's going because I'm a firm believer, and this is coming back to market indicators as well. I'm a firm believer that it's human behavior. Okay, so the squiggly line that you see in the trading markets, that's all stupid human behavior, I call it. It's people being idiotic, being greedy, being fearful, and that's all you're seeing. And that's why I do believe in technical analysis to a point. I don't think that every single time you get a reasonable head and shoulders pattern that it's going to drop, because it's not going to, and it never does. But you can infer something along with the news around that that there might be a drop in that stock for whatever reason on a day trading pattern. And maybe in the AI analysis at the moment, certain patterns produce an outcome 70% of the time, and therefore you can take that risk because 70% of the time you're going to make money. It just depends how much money you put into it. Um, I am not sure because the beauty of something like the stock market is, and those wiggly lines that go up and down all the time, is that when you introduce something, it makes it more uncertain, not less certain, less uncertain. So if you add a new behavior that everyone becomes aware of, now it's now it's not efficient anymore. Or if you add a trading bot which does stuff perfectly, something in there is going to try and make it not work perfectly in order to gain an advantage. And I think that's the beauty of the stock market is trading bots and things like that. As soon as everyone's using it, that means it's wrong because not everyone can make money all the time and not everyone can lose money. So if you end up with 500 billion trading bots all trading against each other at all times, the system doesn't work in its current form. So I'm not too worried about that, but it's certainly going to be interesting to watch that unfold.
But yeah, I think um, anything else you want to quickly touch on? But yeah, I think we've been
Yeah,
going
I
for a
mean,
little while.
yeah, yeah. Sorry, I can just talk and talk and talk. I was interested in what you've got going on, and how you're gonna sort of develop your Instagram channel, and how close you are. Have you got a target in mind of your like financial freedom goal yet?
Yeah, uh, I actually like I quit my job already like recently to kind of invest more time into because my social media platforms have been going so crazy. I want to help other people with their Instagram pages as well as like growing my own YouTube, my own like podcast, which I'm like creating weekly episodes for. I've just like launched my own website as well with like financial guides and like just free tools for people to download. So I'm working on quite a few things, but yeah, hopefully I want to be um, financially free and at like a 1 million net worth by mid to late 30s. Um, so I think that's achievable with kind of my
Yeah.
um,
Do you have a
kind
number
of
in
so
mind?
far.
Not, you don't have to share your number, but have you calculated that number where you think you can reach and go, that's enough?
I think like so I think 1 million is like a good target for maybe like when I'm in getting towards 40. But then I think by the time I get to 40, 1 million, is it going to be worth as much? Probably not. So it's probably, I
No.
think, really going to be like, probably need to be more than that to actually live. Like by then, how expensive is are the living costs going to be? Probably a lot higher than they are now. So I
And you've got
think,
to consider other things. A lot of things are going to happen to you. Trust me, in the next 10 years, a lot of different things are going to happen to you. And I don't know whether you've got control over them or I'm just speaking experience. I have no idea how I ended up where I am right now. I can tell you that. I didn't target it. Like, I didn't go to myself, oh, I'm going to go sit in a hole for 6 weeks. I didn't target to do that, but I just ended up doing it. And I yeah, I think one of the main ones, especially for you, it comes to uh, I can't remember who's been saying it recently, but I've heard it quite a few times on different podcasts. Um, the person who you marry is going to be one of the biggest financial decisions of your life. I I'm gonna go out there and say it's probably Morgan Housel again. Um, that is so important, and I don't know what you want out of life. I don't know if you're the Andrew Tate type who's looking for the Lambo and that lifestyle, or if you are the frugal type who's going to dry out your socks on in the sun and stuff. It's uh it's it's one of them things to really just try and not focus too hard on as far as what's your what your main goal is. I know you're supposed to have a rough guide of where it is, but you just don't know where your life's going to take you at this point. And I think it's more developing your values, what you want out of life and what you want out of, of course, a partner and or anything like that. And yeah, it just to accept that a lot of shit's going to happen to you in the next 10 years that you just didn't expect was going to happen.
Yeah, it's impossible to like predict or outline like a plan which is going to 100% follow, because I think things happen like along like you want to go abroad for a certain amount of time and you end up, maybe it costs you money, but it's the experiences that are worth it sometimes. I think I'm not a materialistic person in terms of like cars and clothes and stuff like that, but I'm more of like, I enjoy the experiences of like, yeah, like traveling and I think that's my main goal, is to like, yeah, get out of the UK, um because it's too cold here and
I tell you what, that at the moment is one of my goals. It's, it's pretty hard work, but it it's something that I've been focusing on recently as well. And yeah, definitely, it's all about experiences, and I think yeah, you've got to you've kind of got to find someone who has the same idea as you as well. Again, this thing going back to who you're going to marry is one of the main financial points of your life, because if you divorce them, it's going to be very expensive. But also, they might want a few different things. If you're stupidly frugal, and they are not as frugal as you are, you have to make a little bit of a compromise, which will then maybe slightly raise your financial freedom goal, if you get what I mean. So that I know I say you need to have a target, but make it quite a wide range, maybe.
no, yeah, good advice, I think. Yeah,
Well, thank you very much for having me chatting to me today. It's been good fun.
no worries,
I
I
know it was
appreciate
last
it.
minute. I know it was very last minute, and I'm awful to keep track of. The playing footsie boys, like I said to you probably earlier, they're not happy at the moment because I just cannot get free, and I can't get free at the same time as people. So, yeah, thank you so much for doing this short notice.
No worries. Where can people find you
Oh,
on YouTube and Instagram?
I don't even know what is my YouTube channel. Is it just Paul Briscoe my YouTube? Yeah, it's just Paul Briscoe, and then I imagine Instagram is Briscoe underscore investing on Instagram. Instagram, that's kind of my back channel to me. If you want, I share too much on there.